Hey guys, what's up? I'm Erin and welcome back to the channel. We talk a lot about building up an emergency fund. Maybe it's 3 to 6 months worth of expenses, maybe all the way up to a year or more if you happen to be self-employed or at or near retirement. But a lot of people end up building up their emergency fund and then they just let it sit there, doing nothing and earning next to nothing. But cash doesn't have to be lazy. It can be smart, it can be strategic, and yes, it can earn more. Today, we're looking at 2 ways Vanguard helps you put your cash to work: the Cash Plus account and the Federal Money Market Fund. Both can be a part of your financial plan. So today I want to break down how they work, how your money is protected, and how you can build a smarter emergency fund that doesn't allow your cash to sit idle. Cash is one of the most overlooked parts of a portfolio. No matter what your income or goals, you need reserves, whether it's for an emergency, taxes, a home repair, or just money you're not yet ready to invest. And yet most of that cash ends up in savings accounts, earning next to nothing, while inflation quietly chips away at its value. That's where smarter tools come in. Vanguard offers 2: the Cash Plus account, a high-yield FDIC-insured cash hub, and VMFXX, a government-backed money market fund with strong yield and liquidity. Today, I want to show you how both accounts work and how you can layer them to build a strong emergency fund, one that gives you both access and earnings. First up is the Vanguard Cash Plus account. This is a relatively new offering from Vanguard, just launched in the past few years, and it's designed to give your cash a better home, all while still offering higher interest rates as well as protection and access. Technically, it's a cash management account. Think of it like an alternative to a high-yield savings account, offering bank-like features, FDIC insurance, and competitive rates. As of July 30th, 2025, it was paying 3.65 APY. That's real interest that's compounded daily through a sweep program that partners with multiple FDIC-insured banks. Now, here's something most people don't expect. FDIC insurance that goes for individuals about 1.25 million and for joint account holders 2.5 million. Normally, FDIC insurance only covers up to $250,000 per account holder per institution, but Vanguard isn't a bank. They partner with up to 5 banks, and then your money gets spread across these banks. That gives you $250,000 of FDIC protection at each bank, totaling 1.25 million in individual coverage or 2.5 million for joint accounts. And you don't have to do anything manually. The sweep program handles everything automatically. Think about it like this. Every time you make a deposit, it gets separated into 5 different chunks, and each bank gets one of those chunks. Now, this type of account is built for real-world use. It doesn't just sit there. You get your own routing number, account number, you can set up direct deposit, you can pay bills, you can access cash apps like Venmo and PayPal, you can even deposit checks directly from your phone. This money is liquid. You can transfer it as soon as the next business day. You can kind of think of it as money in the bank, but with a higher yield. I like to think of it as a checking savings account hybrid. Although there are no debit cards, there's no paper checks, but it does have a lot of flexibility. There are no fees if you opt into electronic statements, which most people do. If you prefer paper delivery, there is a $25 annual charge, but again, that one's easy to avoid. There's no minimum to open this account. There's no extra setup hoops to jump through. Ultimately, this account just sits there right alongside all your other Vanguard accounts pretty seamlessly. So if you've got cash sitting in a traditional bank account earning next to nothing, this is a great upgrade. It gives you great protection, easy access, a better interest rate, and if you're already using Vanguard, it's a no-brainer as a setup. What about VMFXX? It's Vanguard's Federal Money Market Fund, one of Vanguard's most popular options for holding cash, and for good reason. It's a conservative mutual fund that invests in short-term U.S. government securities, like treasury bills and repurchase agreements. This makes it very liquid, very low risk, and designed to preserve capital while also gaining a return. This fund aims to maintain a stable $1 share price, called called the net asset value, or NAV. And while that is not guaranteed, that price has held pretty stable over time due to the fund's structure and oversight. Instead of an APY like a savings account, VMFXX uses a 7-day SEC yield, basically a snapshot of what the fund earned over the past week, annualized. As of July 29th, 2025, that yield is 4.22%. It has a low expense ratio of just 0.11%, so most of what that fund earns goes directly to you. But because it's held in a brokerage account, that means it's covered by SIPC insurance, not FDIC insurance. That means up to $500,000 of total protection, including $250,000 for cash if Vanguard were to ever go out of business. Now, this is important. This money market fund is liquid, but it's not set up for daily transactions. It's not meant for bill pay or set up for Venmo. You can make transfers, but they tend to take 1 to 2 business days. You trade a little bit of the flexibility for a higher rate of return. That said, it does serve as your default settlement account at Vanguard, so if you're holding money in between trades, this is where it's held. Even if this is not money you intend to trade, this can be a great place to park excess cash, that second layer of your emergency fund, because it allows your money to be kept safe and stable and still earn a decent market return. So now that we've looked at each account on its own, let's talk about how they stack up side by side, because while they do serve a similar purpose, they are built pretty differently. Cash Plus acts like a high-yield digital checking savings hybrid, perfect for direct deposit, bill pay, and next-day transfers, with up to $2.5 million in FDIC coverage. VMFXX, on the other hand, acts more like a parking spot for cash inside your portfolio, a way to keep funds stable and working while you wait to make your next move. Cash Plus is currently earning around 3.65% APY and gives you faster access. VMFXX typically pays a bit more, currently around 4.22% SEC yield, but takes 1 to 2 days to move and isn't built for daily transactions. Used together, they're a smart way to layer your emergency fund. So if you're interested in this Cash Plus account, it might be because you're looking for a cash/high yield savings hybrid account. You want that FDIC insurance and you want easy access to this money, direct deposit, quick bill pay, things like that. On the other hand, the money market fund is going to give you a slightly higher yield, but you have to be comfortable with SIPC protection as opposed to FDIC protection. And if you have a Vanguard brokerage account, there's a chance you already have this as your settlement fund. And honestly, like I said before, you can use both together. You can layer that emergency fund to make sure you're capitalizing on the highest yield or the highest returns possible. Maybe you keep 1 to 2 months worth of expenses in a Cash Plus account and then the remainder of your funds in a money market fund. This way, all of your cash is working for you. You're just striking that balance between access, protection, and yield. And what about those yields? This is what most people care about, how much you're actually earning. Both of these accounts have variable interest rates, meaning they rise and fall based on the market. As of July 2025, Cash Plus was earning about 3.65% APY, and that's a daily compounded interest. VMFXX was offering 4.22% 7-day SEC yield, a snapshot of recent earnings annualized. The money market fund typically yields a bit more, usually about 0.5% or less. But again, these accounts are meant to serve different purposes. The Cash Plus is meant for easy access, daily transactions, whereas a money market fund is not meant for these daily transactions. Could you find an online savings account that is yielding more? Probably, but I'm not a rate chaser. As long as I'm getting a competitive market rate, I'm incredibly happy, and I like to simplify and streamline my finances, and since I already use Vanguard as a brokerage house, I'm incredibly happy that they have a high yield savings within their ecosystem. While these accounts are great tools for building a layered emergency fund, they're not right for everyone. If you need access to an ATM or paper checks, these accounts are not a good fit for you. They are both fully digital, and yes, with that Cash Plus account does give you digital access, it doesn't offer these more nuanced layers of a traditional checking account. Also, neither of these accounts offer a guaranteed return. Their yields are variable and move with market rates. So if you're looking to lock in a rate, well, this is not the account for that. And while both accounts are protected, FDIC for Cash Plus and SIPC for VMFXX, make sure you understand the difference before moving large sums of money. If you're unsure, it's worth reading up. Also worth mentioning, these account types aren't unique to Vanguard. There are other brokerage houses like Fidelity and Schwab that have these as well. So if you're already with another brokerage house, there's a good chance that you have this as an option. At the end of the day, the best system is the one that aligns with your goals, perhaps at the brokerage house you're already using. So if you have cash, don't let it sit idle. You can use these accounts and still have quick access and protection and earn a decent yield. And like I said throughout the video, it's not an either or choice. You can layer them together to get the best of both worlds, because your cash deserves a strategy and now you have one. So what are your thoughts? What are your favorite types of accounts when it comes to an emergency fund? Leave your thoughts in a comment down below. I post new videos every single week. If you got anything at all out of this one, please give it a like. If you're new here, please consider subscribing. Or if you know of someone who might get something out of this type of content, please consider sharing. I'll see you soon. Bye. So what are your thoughts? What are your favorite places to keep your emergency fund? Leave them in a comment down below. I post new videos every account types. Don't tell me where you keep your funds. That's stupid. We're not putting that online. No, sorry for using the word stupid, but don't put the accounts you use online unless it's like a general, like, hey, I use a checking or a savings. Say, let's everyone keep yourself safe. So I'll rephrase it because I don't want it to sound like I'm asking you to put your account information. Don't do that ever.